Hi guys, welcome back to another video. My name is Josh and today I'll be talking about why 2019 was such a good year for investors, especially for us Kiwis in New Zealand. This was a very good year. There's a lot to be thankful for in 2019. So in this video, I'll be going through 3 reasons why I think 2019 was such a good year for investors. Okay, and these 3 things really sum it up for me at least. Let me know in the comments down below why you thought this year was a good year, or if it wasn't such a good year for you, why it wasn't such a good year. Okay, let me know in the comment section down below. But without further ado, let's get into the 3 reasons why I think this year was such a good year. So the first reason why I think 2019 was such a great year is because the returns basically show that it was a good year. Okay, if you invested since the start of the year, on the first trading day of the year, if you invested in the NZX 50, you would have got a return of 31.49%, and if you invested in the S&P 500, you would have returned a 27.7% return. So these returns are superb. They are well above the average return of these indexes. Now, I have mentioned before, the average return of an index fund is usually about 7% or 8%. Okay, so to be getting 27% and 31% returns, that is a bit abnormal. Don't necessarily expect returns on index funds like we have before. There are a few reasons why the index funds have gone up so much, right? But I think one reason really boils down to the heart of it, and it's because interest rates have gone down so much. So in New Zealand, the OCR has been cut quite a few times, as well as in the United States, the Fed rate has been cut as well over there. And what this does is that it moves investments out of interest paying assets like bonds and term deposits, and they move into equity assets like stocks. There was a shift in asset classes. People were moving more into equities, and what this does is that it makes these index funds rally, make them go up. And this year as well, there was really strong economic numbers coming out of the United States, which really caused the S&P 500 to go up. And the New Zealand market tends to follow quite closely to the direction of the S&P 500. The returns this year were so good, mainly as well because last year's returns were terrible. There was a massive sell-off in 2018, and that set up 2019 for a very good year. Okay, so as you can see, in December was not a very good month in 2018, and stocks fell significantly at the end of the year, and as soon as the new year came, stocks just rallied. So chances are, if you have invested sometime during this year, you would have made money. Okay, and I would say more people made money than lost money this year. If you just started investing, then this year was probably one of the better years that you started investing. So the second reason why I think 2019 was such a good year is because the cost of investing for basically everyone has dropped. So in the US, a lot of these major brokers like Charles Schwab, TD Ameritrade, Interactive Brokers, they've all dropped their commissions. So basically, to buy and sell shares, you don't have to pay anything. And in New Zealand, we're not there yet. We still have to pay a fee to buy and sell stock, but it's been dropping a lot. The cost of trading has been dropping a lot, and that's because of Sharesies basically starting sometime during 2019 when they offer the ability to buy stocks on the New Zealand Stock Exchange. And that was really the first video that I made on this channel, and that got the channel going. Before Sharesies, you would have to pay $30 per trade. And that is a lot of money for smaller investors, right? Because to buy and sell, it would cost you a total of $60. And that really meant that smaller investors who maybe only had a $1,000 or $2,000 to invest with, they can't really buy in small chunks, right? They're not able to buy 500 here and 500 there without incurring massive fees. And that really limited the ability of smaller investors to dollar cost average. Okay, so with Sharesies coming in, the cost of investing has dropped significantly. And then on the other side in the US, you have Hatch as well. So Hatch really opened up US markets to Kiwi investors, right? In the past, to invest in US stocks, you either had to sign up with a US broker and pay very high amounts of FX fees and account fees, or you had to go through a specialized broker. And that wasn't very accessible for investors with smaller amount of cash. With Hatch is open. It's very cheap as well. The trading fees are about $8 per trade, $8 I should say. So that's very affordable, and it's very easy to sign up. So one of the positive flow-on effects of Sharesies and Hatch is that it got a lot of new investors coming into the stock market. And coupled with the reason why I said earlier about the stock market going up was a good thing, is it provides a really good first sort of taste of the market for these smaller investors, right? Imagine if you were putting money in for the first time and you lost money. You would be completely put off investing in shares, and it will be very difficult for you to come back into shares, which is what happened in the past in New Zealand during the 1980s, where there was a huge market crash, which sort of encouraged a mentality that shares was more like gambling and not really investing in real property. And what happened was, following that, a lot of these baby boomers then invested in property instead of shares. There has been a shift in sort of the perception of investing. In the past, it was a bit of a taboo subject. You don't really talk about shares or investing or money matters at all. I was just at a Christmas party yesterday, and one of the guys just started going into Sharesies as well, and we were able to have a decent conversation about finance and investing. So I feel like one of the other side effects of Sharesies and Hatch is that we're more open to talking about investing and money matters in general. It's not so much a taboo subject to talk about these days. So I'm really glad that we're tending towards that more openness about money and finance. So a lot to thank Hatch and Sharesies for this year. And if you like to support the channel, sign up using the Sharesies link down below. You get $10 when you sign up. I get $5. If you use the Hatch link, you get $20. I get nothing. So yeah, check those links out down below if you'd like to sign up with Hatch or Sharesies. So the third and final reason why I think 2019 was a good year for investors is because of the uncertainty around capital gains taxes is now completely eliminated. In February, the tax working group set up by the Labour government has recommended a bunch of tax recommendations, and one of them was a capital gains tax. So to give you some background on the capital gains tax in New Zealand there's no comprehensive capital gains tax. Okay, there is certain clauses that might treat certain capital gains as deemed income. Okay, this is captured in the Income Tax Act 2007, section CB4. If you want to look at that. And CB4 is basically a tax on personal property, and the way the IRD determines whether capital gains tax is treated as income tax is when you had an intent to buy something and sell it for a higher price. So that's not a comprehensive capital gains tax. A comprehensive capital gains tax would be one that said if you buy and sell shares, you'll get taxed. So that's comprehensive, whereas this is more like personal property. So it could be anything. It could be buying toys and selling it for a profit. If you had the intent to sell it for a profit, you'll get taxed on that. In April this year, the Labour government has said that they won't be implementing a capital gains tax. And so, this is a huge relief for investors in the market because, if a capital gains tax were to be implemented, then the returns that you receive would basically drop by your income tax rate, which could range from 33% to 10.5%. So that would severely drop the incentives of investing in stocks, and this would have caused quite a bit of havoc in the capital markets. It's not tax advice. If you need help with taxes, be sure to seek out an authorized tax advisor. So to sum it all up, this year has been a great year because of the market going up significantly, the cost of trading has dropped significantly, and there's less political uncertainty around capital gains taxes, especially on shares. If you enjoy content like this, be sure to like and subscribe. Until then, take care.